goddamn technology. Hey everyone, happy President's Day and welcome to Monday Night Futures live from the fancy recording studios here on the longest of island, Long Island, New York. I hope everybody had an awesome weekend, and we did have the futures market that was open today. Of course, I had to peek around, be nosy. Not much happened. The futures market is open now. We will spend some time talking about it. And we're going to talk over some concerns. I already went over on the week ahead commentary with members that I had a lot of concerns about the market. That, however, is I'm not ready to go all in yet to the short side on the market. We did spend some time last week reopening positions to the short side, adding more to shorts, but very, very incrementally. One lot contracts to the put side, meaning very small, nibble, because when you get to a point in the market where you think that, you know what, the top is probably in, every once in a while, you know what, let me rephrase. Usually, you plan to the short side, the market smiles along with God, and they take it up yet again. So we're aware of that. We've been around this block before. We want to be liquid when the dam breaks, because when the dam breaks, there's going to be a lot of money to be made. The key to profiting from this Pimp Mac Daddy of all bubbles that has ever been created is the L word, liquidity. So let's keep the liquidity up there. Let's keep the shorts very small, very speculative. Let's understand when we need to get out of this market, just in case we are wrong to the short side or wrong to the long side. We want to be humble. We do not know it all here. All right, so we're going to go over a bunch of charts tonight, and we will do chart requests. But first, let's go over comments, because you guys matter most, because you're spending the time out here. Hello, Sam. Hello, sir. Franklin. It was a really good weekend. I planned out a trip, actually. I'm going to Europe in May. So I booked what a nightmare with American Express. Thank God I have a lot of points. So, but I just had a problem with American Express. I'm not going to badmouth them. I love them as a business partner. I use them all the time. But man, what a pain in the neck they were to get this trip booked. But it's booked. The flights are ready to go in May. About 2 weeks of I'll be recording from Europe. I got to write off the trip, of course. So we'll turn that trip into a tax write-off. Why else are you here if not to see how we play the game? All right. So we're going to do it legally, but we will use the trip as a opportunity to save a couple of bucks. And Franklin, I hope you had a great weekend as well. TF Hatter. Hey, Bob. Hello to you, TF Hatter. Yoga back. Hello, Bob. Why can't we just have a competent president? Because he was installed. The guy was installed. He doesn't have to be Superman. He could just show how the American citizens some respect. Yeah, and I think what you're referencing, perhaps you're referencing this, is that you have Biden over in the Ukraine. We're going to talk a little bit about that in a moment. And it's really not the action. It's the attitude. It's the narrative. It's the absolute disdain for the American public, and it's just the corruption of the so-called political. People like to use the word elite. I hate when they call them elites. They love it. They love to be called elites because in their minds, they are the elite, but they're parasites. We need to get to a point where we say, okay, those who are calling elites to this point must now be called parasites. They feed off the guts of the working class. Without us, they do not exist. So, or their wealth cannot exist. You had, what's his push? Bernie on I forget it. Was it Margaret Brennan? I think her name is I don't want to badmouth Margaret Brennan. I think it's a different lady. However, she's got a Sunday show. She used to be good on CNBC. Now she's just an angry feminist on whatever channel she's on Sunday mornings. And Bernie's on there. And to her credit, she calls Bernie out because he's given speaking engagements, $95 a ticket, $95 a ticket to hear this curmudgeon to go out and chat. And he goes, I haven't made one penny because you've already been paid on a book. You got paid your advance. He's got 4 mansions. This guy's a communist. He loves to be called a communist. He calls himself a communist. He vacationed on his honeymoon in Russia when it was the Soviet Union. Yeah, they're all so corrupt. It's in your face. So this is one of the problems, folks. And I get a lot of people, one of the top reasons why people join and they cancel. And it's not that I talk politics to members per se. I'll talk it in the open forum where it's free and we're having a conversation. And they'll cancel on me because I spoke poorly of the president, as if I shouldn't speak poorly of a potato. He's corrupt. He's corrupt. You don't like it? Do me a favor. Unsubscribe to the channel. We don't have anything in common, right? It's a problem. If you're going to ignore these demons, these lizard people, you do so at your own detriment. I choose not to ignore these people. They are my enemy. They are the enemy of our economy. They may be Americans, but they are the enemy of America. Everything they do is against America. You have this potato in chief over in the Ukraine. More money, more war. Yet not one penny for those people, those poor people in Palestine, Ohio. Think about it. Think about it. Not one penny for those people. That should tell everybody all they need to know about this government and how they think about the American people and hardworking people like that, blue-collar people like that, and they don't get a dime. How dare these scum, these parasites, so-called elites? I'm sorry. I am just done. I am done. I digress. Happy President's Day, everybody. Like, subscribe. Okay, let's get to it. Hope the contrarians are well. Yeah, everybody's doing good. Nice haircut. Thank you very much. Thank you. It's actually grown in. It was really a lot shorter, just grown in. What number does SPY have to give up in order to drop? We could talk about that. Yeah, that's a good question. We talked about it a little bit on the week ahead commentary. I didn't go into great detail on it, though. We spoke more about resistance levels than when we break, and that's a good point. And given the fact that we're so close to the end of the month, I want to spend a little bit of time going over the monthly charts. I dropped my pen. I set up my new monitor here, and I'm all disheveled. I don't even have a pad to write. Oh, here it is. Sorry, folks. There's my pad. There's my pen. As disorganized as ever. So, yeah, we'll talk about SPY levels, but on a monthly time frame. We want to get that 100,000 foot view of the battlefield because we're at a precipice. We're at a precipice, and we're going to talk about, as we do frequently, the yield curve. We're going to talk about the dollar. We'll talk about resistance levels, and we'll talk about Thursday's price action. Thursday's price action was a glimpse. It's a little bit of a glimpse. It just goes to show you how you can go from a trajectory higher to all of a sudden there's no floor. Once you think you go lower, you go lower. And we'll go over an intraday chart of, in fact, we'll go from the monthly chart of the SPYs and we'll drill down to an intraday view of the SPYs, Qs, or whatever. We'll spend some time there. So we'll do a deep dive there, SPYs and Qs to a certain extent. So I just want to make a note to myself not to forget, because I get into all these comments, I go off on tirades and I forget, and people, I'm sure, do not appreciate that. Tim, hello, sir. Pete, Mr. Pete. Corey, hello. Hello, Bob. Love you. Thank you, sir. Thank you, Corey. I appreciate that very much. I appreciate it. TF Hatter, I'm in TRKA. It's going to blow up tomorrow. Finally got one. All right, we'll go over it. We'll go over it. All right. Welcome back. Like the stream. Yes, please like, subscribe, folks. Please, if you could do that for me, I would appreciate it. Glad to hear you fixed up your trip ahead and they fixed it so you could. Yeah. I was worried there. Yeah. I'll have men in black at the airport waiting for me. Denny, hello, sir. Bonnie B, amen. Amen to you, sister. Thank you, Bob. You're welcome, Yoga Mac. Bob, keep on talking about politics. I love it and learn from it. I will, Tim. I've been borderline on it because certain people get upset, but you know what? It's to, years ago, and here's the truth. When I first started the Contrarian Trader, it was in 2005. And that was just after the dot-com bust. And I started the channel because when the dot-com bust occurred, you didn't really realize how naive you were about the chicanery, the shenanigans, the deep state of the financial media that we have in the government. Is that deep state? It's in the financial media. And you didn't realize it until after everything went, because there was this guy way before Bernie Madoff, Bernie Ebbers. I've told this story before. Bernie Ebbers, you have the guy that owns or runs Business Insider, Henry Blodgett. A bunch of these guys were out there. Skilling, Jeff Skilling over at Enron. All these guys are on CNBC constantly. Years later, they're in jail. These people were kings. They were treated as kings on CNBC. They could do no wrong. And then all of a sudden, you woke up. You woke up. I got red pilled. And I realized, holy crap, this is bad. And when I first started the Contrarian Trader, you can go back to 2005. In the Wayback Machine, if you type in Wayback Machine, go to 2005 Wayback Machine. You'll find my first website. I built it myself. It was on a Yahoo site builder. And I spent a couple of weekends doing it. It took me forever. And you'll see on it, there's on the title bar, crooks. And I used to do blogs. I was so pissed off about I was outraged about the corruption. I was just doing video after video after video. Not video back then. I'm sorry, it was blogs. We didn't have video back then. And then I went to MP3, and that was just the iteration. Back then, I spent a lot of time, doing charts, but doing a lot more commentary on the corruption. Then came 2007, 2008. That's when, actually a little bit after that, because that's when you had Obama came in, the bailouts, Bernanke. Then you saw the power that shifted from Wall Street. Goldman Sachs was out. BlackRock was in. The power shifted from Wall Street down to Washington, D.C. And if you ever take a look at that point in time, remember, the economy was in a major recession except for one area of the country. and that was right outside Washington, D.C. That I think is it Arlington? I'm not the best with it, but that whole area outside Washington, D.C. was blowing up. Why? Obama had come in. All the deep state guys, the corporations are moving in. They're what do you call them? Lobbyists, losing it. Lobbyists were moving in, and that property market blew up, and that's the only one. So, and that's when my focus came off of Wall Street because the power had shifted from Wall Street, which is now a euphemism. There really is no more Wall Street. And the shift of power went down to Washington, D.C., and of course, the Federal Reserve. Danny, great. Thank you. Jody, I finally got back to your email. My apologies. I'm horrible with email. Yoga Mac, America. Corey, he's spending billions in Ukraine to protect their border and leaving mine open in Texas. God bless you, brother. Yeah, they protect the border of Ukraine, but we don't have a border anymore. Tell me. I mean, who profits? Who profits? Historically, the U.S. Chamber of Commerce was a Republican support group, and it still is. But it's the Chamber of Commerce that influences the Republicans to allow the illegal immigration, the lack of holding the Biden administration accountable. Why? The reason is they want cheap labor. The Democrats want voters or potential voters. They want constituents. And you may be saying, whoa, Bob. They can't vote. Supreme Court decision came down that if you have illegal immigrants living in your jurisdiction, your congressmen are apportioned by population, not by legal population, but by a population of legal and illegal. So the Democrats allow them in their districts, and they get more Democratic congressmen into office. So it helps them in Congress. So that's one of the reasons why they want illegal immigration and no borders. Did the cues include big tech? Yes, absolutely, yeah. You didn't miss anything yet. Just me going on a little bit of a tirade. You missed nothing, believe me. Yoga Mac, the coffee I used to buy was $4.99. Yeah, and it's never coming back down. Maybe it'll go on sale if the prices ever level out. But this is the new reality. And with the illegal immigration, depending upon the type of work you do, it's why would they increase wages? Especially on farms or in factories, etc. Hey, Bob, your view on RKLB and NTLA. Okay. Just paid $5 for butter. Yeah, it's crazy. And commodity prices. Yeah, I know you said that in your email. It's funny. David Olsenak, the left and right wing belonged to the same bird until 2016. The left and right belonged to the same bird until 2016. I believe that the Republicans and the Democrats. I don't conflate left with Democrats anymore, nor do I conflate right with Republicans at all. At one point in time, I did during the Reagan years and post-Reagan years, but that all came to an end a long while ago. George Bush, the younger, really made me part ways there. I never agreed with the invasion of Iraq. I never agreed with it. Never thought I'd see a dozen eggs cost more than a pound of beef. Think about it, right? Think about it. And they're just getting started on on I forget what country it is. I think it's Ireland. They want him to decrease the cow population by a third. A third. Interesting times. Interesting times. Let's get to it. I think that's the longest intro I've had so far. Good conversation. Thanks for being here, everyone. We're going to get started with a really just a look at the opening futures. And they were open last night, but it really doesn't make sense to go over them. On a night where you don't have the markets open the next day. So where do I want to begin here? Let's I didn't even set these up yet. Let's talk about equities. We'll kick it off with the E-minis. And they were down all day. I mean, not much change here, not much volume whatsoever. This is only a 5-minute chart. Let's go to a 15-minute. There's not much happening here at all. So it's quiet. That Thursday session spooked me. It spooked me. And it caused me to close down a bunch of positions. Some of them I was profitable on. Some of them I was not profitable on. I didn't care. There comes a certain point in time where I see certain price action in the market. I know there's more coming. So I get that feel of, this could either stop now or continue, or it could stall. That was just the tremor, and we get the follow through in a few days. So I went to a lot of cash on Thursday. So the E-minis for the small caps, they're down a 0.5 percentage point. They're off their lows. And let's take a look at a 4-hour view for how we look. And this is a better view, right? So let's get rid of all this for a moment. And let's talk about what's happening here. And you could do this for the NASDAQ. If you want to do it for the NASDAQ, we'll do it for the NASDAQ. We'll clear all this off. Let's start fresh. So what are we looking at here? 4-hour chart. And all I do is this. This is all I care about. Are we putting in higher lows or higher highs? Right now, we have a lower high. Okay. That's a red flag. That is not a buy signal. That is a red flag. Are we putting in higher lows? Yeah, we are. There you have it. So when I take a look at the battlefield, the map for when we go into the new trading day, this is the first thing I'm looking at. What are we doing? What are we dealing with here? Well, we're flagging out. Is it a bull flag? Is it a bear flag? Right now, it's still a bull flag setup on an intraday chart. We're consolidating here. But I'll tell you, this consolidation is going to get resolved very soon. Because within this 4-hour uptrend channel or consolidation range, you have a narrowing triangle formation, which is at the apex. So on this 4-hour chart, within the next 24 to 48 hours, we're either breaking out or we're breaking down. One of the two. 50-50, which way it goes. So I'm not loving this from a risk reward perspective. I'll trade whatever the direction it decides to go. But right now, I'll give this a yellow flag right now. I'm neutral on the the Russell 2000. Now, taking a look at the NASDAQ 100, to me, this is a problem because we had broken out to a new higher high. In fact, let's do this. Let's get rid of this. A new higher high relative to this high here. The problem is that now we have broken down. So whereas the Russell 2000 is in a sideways consolidation, the Qs, of which we added more to the short side last week, small amount. And I spent a lot of time on the weekend commentary with members talking about strategy. And while I wanted to make sure the context was there, meaning just because I'm throwing out one lot contracts of Qs short does not mean I'm aggressively shorting the market. It means that I'm speculating short, getting ready to be proven wrong. If we break out on the Qs, I'm going to stop out. We'll go to cash. We'll look for a better risk reward entry point. Could be at a higher price, and we'll be glad that we stopped out, took a small loss. We're not that prideful that we're going to say, oh, I don't want to admit I made a mistake. It's not making a mistake. We're entering tactically. If the market says, no, you're wrong, and it takes us up, okay, we admit our wrong. We'll go to cash. And we'll wait for a better risk reward re-entry point to the short side, because we're going to go to the charts in a moment, folks, where if you're not convinced yet, if you're not convinced that this economy, this stock market is completely effed, you're going to be. If you've been watching for a while now, I've gone over the yield curve a dozen times for the sole purpose of repeating myself and hopefully driving it home that this is not going to end well. However, it will end well if you're positioned accordingly. And the key is just because I'm showing you that this setup is here doesn't mean you go in now and short it, because we can stay in this surreal setup in the bond market, and equity markets, they can keep moving them up higher. They'll come out, the Fed's going to pivot. Okay, another 100 points on the SPY. Guess what happens to your shorts? They get wiped out. Just because they're pumping the market, they're getting the amateur money, the dumb money, stupid enough to go running in and chasing this market up higher, believing that this is an investable market, when in reality, all they're being done is they're being led like lemmings off of a cliff or lambs to the slaughter. I have been through way too many corrections and bubbles in my life. I've seen this show before. There's a puppeteer behind all this. If you ignore it, you do so at your own peril. You're here for a reason, and we're going to go over the charts that are going to help protect you, and they're never, ever going to tell you about it on CNBC. I don't have advertisers. I am not beholden to them. I'm beholden to the truth. Okay, so here's the breakdown. And Grant, this is only a 4-hour chart. It's not as powerful as a daily breakdown, certainly not as powerful as a weekly breakdown, certainly nowhere near as powerful as a monthly breakdown. But it can't be ignored. I think that they're going to rally this. I think they're going to rally it right back up here and try to recapture this support level. But man, if and when they fail on a break to a new lower low below last Thursday's lows, you could bet your bottom dollar I will be watching for that failure. I will probably be speculating to the short side in anticipation of that failure, watching the price action. If in fact we break below Thursday's lows, you could bet you're going to see money exiting this market. Our alert is set. We're good to go here. Now, taking a look, we already did the NASDAQ. We already did the S&Ps. We did the small caps. Let's take a look at the US dollar, because the dollar is underestimated by many investors, because the US dollar is not only influential on gold and silver, the mining stocks. When it's strong, it hurts the mining stocks. When it's weak, it helps the mining stocks. When the dollar is strong, it hurts multinational corporations domiciled in the United States. Why? Because the cost of their goods are more expensive overseas. The currency conversion hurts them. Microsoft has said so. I repeat this so that it takes hold. If you hear me say this for the third, fourth, fifth time, the reason is that I want it to take hold. The dollar, strong dollar at current, when you have an economy that it's this weak, is not good for multinationals. So the dollar continues to grind up. Weekly time frame. While I don't think this is the most bullish of charts, the path of least resistance is clearly to the upside, and therefore not good for equities. It's not good for gold. It's not good for multinationals, in particular the Qs. Dollar moving up higher. What's the Qs doing? They're breaking down. So uptrend on the dollar, still strong. Now, the price of gold has been in a downtrend with a weakening, with a strengthening US dollar. We broke that trend here. The rest was history. Here was your blow off top. Let's get rid of this. Did that wrong. Here was your blow off top. We blew out of this upper band of resistance. The rest was history. And this is what I mean when, you don't think that this can continue up higher. It kept hitting this upper band of resistance. You could have been shorting here. You could have shorted this break of this lower band of support. What would have happened? They ripped your face off with one last short covering rally on gold. And now look what happened. This is why, until you get your ultimate break down below support, you don't want to be all in on the short side. You want to wait for that ultimate break. You could nibble, but you don't want to put yourself at risk for a margin call or having too much of your liquidity tied up to the short side and you're fighting the market and you're not trading with the market. So that's the neutral line there. And here's your lower band of prior support, which is now going to act as resistance for gold. So gold remains at current while up on the session. Whoa, actually, look at this. Actually, I amend my prior statement. Gold has now broken out on a 4-hour time frame. Now, we added back some of our gold mining stocks that we had sold at the beginning of this sell-off last week. I'm not ready until the dollar breaks to the downside to go adding more yet, but this is certainly an interesting event. Good stuff. Taking a look at, let's stick with commodities for a moment. Let's take a look at silver. Silver, just we stopped out of roughly about half of our silver position back here. And we here was your consolidation range, a rounding top, and then a break. Now, I'm not convinced that we're done going down here. We've certainly broken out on silver above an upper band of resistance. There's a couple of them here. All right, we're trending higher. Well, we're putting in higher lows and higher highs now, but until that dollar breaks on a daily, weekly time frame, right now I'm just viewing this as a short covering rally and not necessarily a reason to go buying more. Add to that, cash is doing pretty well right now, and we're sitting on a sizable amount of cash. And once this market begins to break, the thing to remember is that everything goes down. Everything is going to go down with the exception of maybe bonds and the US dollar. The reason is that notes are like the diamond encrusted product to have if you had your choice in the financial market. The dollar as well, money markets swell up. There's a demand for dollars. So those two are going to go up. Gold will go down, not as much as the gold mining stocks or the silver mining stocks. Silver will go down more than gold, but they will recover quicker than the equity market. And that's what we've seen over periods of times in the past where you've had a yield curve which inverted, then began to steepen, stocks begin to roll over, along with gold, along with silver, along with the mining stocks, but then they recover first, and equities continue lower. Let's take a look at energy. I mean, energy last week really took it on the chin. I stopped out. I think I mentioned this on Thursday night. I stopped out of natural gas. I have a rule. If I can't explain why I'm long of put options or call options in a single sentence, if I can't explain to you my edge, I sell. I got to get out. So that's exactly what we did on Thursday. And I think a couple of people got pissed off at me, but it went down on Friday. So I think it was the right decision to make. So natural gas down currently, and we're still holding this breakout of a downtrend channel in a 4-hour time frame. But I'm not loving it. I'm not loving oil. Oil had a rough week last week. We did break out of a 4-hour downtrend channel, and we're holding it. It's not broken yet, but the energy stocks are coming in quite a bit. And you want to pause here for a moment and say, okay, what do you read into that? Well, don't we have with natural gas? Don't we have natural gas prices now lower than before the Russians invaded the Ukraine now a year ago? What's that all about? Don't we have oil prices with Russia offline? Not offline. They're selling it to China. China's selling it back to the Europeans. Idiots they are. And we have oil prices which are fairly stable relatively, and you could say that Biden emptied the strategic petroleum reserves. Okay, but I'm not convinced here that this is not a demand issue. I think it's a demand issue, and I mean he didn't empty the natural gas reserves. I don't think we have them, but certainly natural gas prices are far lower than where they were this time last year. So my interpretation is that it's a global slowdown. Let's take a quick peek at ag. Let's go to a weekly chart. ag prices were down last week, or was this week? Yeah, that's last week. They were down last week. Still holding a breakout. Soybeans, they were down last week, still holding a breakout. Wheat, down last week, still holding an uptrend. Now, the chart I wanted to save for last is the chart that disturbs me the most, and that's this one. Okay, so we're going to talk quite a bit about yields, folks. And I know that a lot of you out there, especially guys that are just new to trading, you have a small account, all you care about that new penny stock out there is going to go to 100. That's not what this business is all about. And if you want to be around for the long term, you have to understand the bond market. As boring as the bond market is, it's your edge. If you understand how equities trade in correlation with bond yields, that's your edge. If you want to put on a long trade of technology stocks, you don't want to be putting on a long trade in technology stocks with a 10-year yield at 3.9% or higher. You just don't want to do it because they tend to buckle, those stocks, at that price point. You could buy bank stocks up there because their NIM, net interest margins, expand with higher interest rates. That's just the way it is. Different businesses that have different relationships with higher yields, and you need to understand it. Now, in the case of the 10-year yield, this is a powerful chart. What did we begin talking about? We were talking about the 4-hour chart. The same thing we wanted to look at when we're taking a look at a weekly chart. Are we putting in higher lows? Yes, we are. That's bullish. Have we broken out above resistance? Yeah, we did that 3 weeks ago. It's not what may happen, it's what's already happened. Have we broken out to new higher highs? Yep. Check that box. We did that last week. The only one we haven't taken out is this one here. 3.26. 26. Come on, Bob, you can get it. All right, you know what? That's close enough for government work. Folks, we start breaking out above this level here, above 4.326. Buckle up, because the market is not going to respond very well. So the way we interpret this is that you're hearing a lot nowadays. You know, let's go to it. Let's go to. I already have this laid out. We're going to come back to this chart in a moment. All right, so let's go to comments first. How much lower can nat gas go? Facebook. I don't know. I don't know. And you know, were I long of the? First off, I was long of call options on Boyle, which is a leveraged ETF. So you have time decay on the derivative, which is the leveraged ETF, and you have time decay on your option. It's like double time decay in my mind. If I was long of the UNG, which doesn't have the time decay, I would be more comfortable with it. Not necessarily the options, but I don't know how much more downside there is. I don't think there's a lot more, but I can't own options on a commodity that's just trading sideways with a bias to the downside. Doesn't make sense. Not that I won't re-enter. Yeah, I took a look at Bitcoin over the weekend, and I took a look at the monthly charts. It's around this time of the month where I begin to take a look at the monthly charts to get a feel for, okay, how are we closing? We near the highs of the month, the lows of the month? How are we relative to prior months? Where are our support and resistance levels at? And I was very, very impressed with Bitcoin monthly chart. So we have clearly broken out of a downtrend channel on Bitcoin, and we even have a new monthly higher high. Several trading days left to go here. It's trading like a risk asset. But the one thing I did take a look at, the question to myself was, okay, what's the correlation? Because the first thing I said was it's trading like a risk asset. But sometimes you have a recency bias in trading, meaning that several months ago, maybe, yeah, it was trading with the S&P 500 to the downside like a risk asset, and then it was trading up at the S&P 500 like a risk asset. Is that true as of now? Let's compare it to the Qs, because we trade the Qs more. Now, in a monthly time frame, you could see the correlation is 93%. That's a very, very tight correlation. You don't get more correlated to the Qs than 93 percentile. But as you do a deeper dive, if memory serves me, I'm going to be embarrassed if I got this wrong in my memory. It begins, yeah, I'm right. Okay. It begins to deteriorate. On a weekly time frame, it's only trading 48% of the time, correlated to the Qs. Let's do a deeper dive. Daily chart, 17% correlation to the triple Qs. So that correlation argument, while it can come back, it's kind of dissipating a little bit. So my take here is that, we've been talking about central bank digital currencies for a long time now. And I think now it's starting to be hit mainstream. They're starting to realize, holy Christ, we have a major problem here where in Canterbury, England, right now, what they're doing is they're setting up 15-mile cities. Basically, they're going to tax you every day if you go outside of 15 minutes of your domicile, your primary residence. So if you work 15 minutes beyond where you live, they tax you, I don't know, £5 a day, every single day. And it's going to be, it's coming all over. And they have surveillance cameras, and Britain's always been this way. They've always had surveillance cameras everywhere, going back to the 90s. I remember this. And then it'll be facial recognition, and they're going towards that Chinese model. And to make that Chinese model work, you need to have digital currency. And that way you control the wallet, you control the people through taxation. They're not going to wait for you to send them a check. They're going to take it right out of your account. So that's what's coming. So I think that what we're probably going to see is an increase in the correlation of gold and crypto. Not all crypto. I don't know much about all crypto. I know about the leadership names, all right? Ethereum, Bitcoin. What do they do? How are they constructed? You're talking to the wrong guy. I have no idea. All I know is where the smart money's putting some money. I'm putting some money, not a lot of it, speculative money, just in case I got to bribe a border guard someday. And that's what I'm seeing setting up here, is a realization that there is a new dawn coming and it ain't looking good. All right, let's talk about Patrick. How you doing, Pat? Long time. House arrest without trial. Yeah, it's exactly what that is. I couldn't have said it better. So what are you saying? So what you're saying, it is better to be retired. Yeah, I think that, as a matter of fact, that's a good point. And the government will eventually get to this. But you know what? I'm thinking like the government right now. Because you're retired, you're making income off of not having to drive out of your 15-mile zone. Therefore, that should be taxable income, you being retired. That's what I'm saying. How's that for insanity? Bitcoin and Ethereum will back the CBDCs and all ISO 222 tokens be used to access the value of CBDCs. All right. I guess it's not good, huh? I'll own gold. Distrust the neo-feudalist is bullish Bitcoin. Yes, agreed. All right. So economic data coming out this week. We have not that much coming out. We have PMI numbers. We're in recession. I don't care what anybody says. PMI numbers have been negative for months now, and any read below 50 is a sign of contraction. We're a services economy. We are in contraction. They're expecting more contraction. We're going to get the FOMC minutes coming out on Wednesday, Thursday, GDP Q4 revision. Don't expect much there. Initial jobless claims. We get that every week. The PCE index, that comes out on Friday. That's the Federal Reserve's favorite inflation index. That can move the market. So while we don't have much coming out in terms of economic data, there's certainly an opportunity for some of these economic reports to impact the market. Earnings, Coinbase coming out on Tuesday after the bell, Palo Alto Networks. Those names I usually trade. I haven't been doing many earnings trades this quarter. Walmart, Home Depot, those are not fun to trade on earnings. What else do we have here? NVIDIA coming out on Wednesday after the bell. That should be a good one. Alibaba, we do not trade Chinese stocks. Moderna, that's thing falling apart. I would not touch that thing with a 10-foot pole. LNG, Cheniere coming out. Nicola, Yeti. Love my Yeti, man. I believe in the product. Block, Carvana. I think they got funding. This is a dead man walking company. Be careful with them. Beyond Meat, another dead man walking company. All right. LMT, is that a symbol, or you were looking for clarification on the symbol LNG I just said for Cheniere? Or is that your chart request, Jody? Just let me know, okay? All right, S&P earnings growth declining. Why am I paying these valuations? S&P 500 valuations 29.63 relative to the mean of 17. Buffett indicator overvalued. We're back above overvalued on the Buffett indicator. Why do I want to pay a premium for this market? Why? We have earnings going in the absolute and utter wrong direction, and equities is, by any measure, on a rearview mirror basis, are expensive. Now, what the street wants you to pay attention to is forward-looking estimates. Estimates. They're not rearview mirror, which are factual. They want you to pay attention to estimates. Forget about 29 handle, nearly 30 handle on the S&P 500. Forget about it. Look forward-looking. Earnings growth is rah, rah, rah. There's only a couple of problems. Margins, sticky margins, and entrenched inflation remain continued headwind for risk assets. So while margins are okay right now, they are being challenged. Why are they being challenged? Because yields are moving up higher. We've already gone over it earlier. We're going to go over it again. The Federal Reserve, yet again last week, reduced the amount of debt on their balance sheet. What does that do to yields? They go up. Tightens liquidity. I kind of went out of sequence here, but we'll go with it anyway. I'm looking at bubbles here, or pins to this market. And you may not like James O'Keefe. I happen to like him a lot. He's a true journalist in the historical sense. He puts out one of the greatest pieces on the corruption over at Pfizer, the alleged corruption over at Pfizer. And only days later, after mounting the greatest coup in journalism history, there's a coup at his own organization, and as effective today, he is out of the company that he formed 13 years ago. I would encourage anyone to go over and watch this video of his departure and the pure shenanigans that went on behind his back. These are some sick bastards over there. Pardon the language. Pat, I hope your grandson's not listening. Family-friendly show. My apologies. But it's this type of corporate elitism or the corporate parasitism that is just really infecting the rest of the economy. And at some point in time, it's going to come home to roost. And you have explosions. I don't know what's going on in Ohio, all the train rail disruptions. It seems like every other day, whether it be down in Florida, down in, I think it's Houston, down in Ohio, which we all know about. Now we have a factory, a metals plant blowing up, black plumes of smoke over in Ohio. It's like a war zone. You have, I haven't even watched this. Let's watch it. I'm gonna put I gotta unshare for a moment so I can get the audio up here. Let me reshare. Allow system audio. There it is. Let me reshare. And now you can hear what I'm hearing.
Wow. That's fucking insane.
It's scary, huh?
Wow. All the while, we have a so-called president over in the Ukraine, which he's very, very familiar with. The big guy is very, very familiar with the Ukraine, and he's over there. And there's one headline for deconfliction purposes. I guess they just made up this new word, but the real reason is, of course, is that he's promising new military aid to the Ukraine. And folks, there's a Russian offensive coming up. And at a bare minimum, it's going to be about 500,000 soldiers coming over that border. And they're going to be gloves off. And all these tanks that you've heard coming over to Ukraine, they're not going to be ready and over there with their troops trained for months. And if you don't have the precision guided missiles above those tanks, even if they are on the ground to act as overhead flak or overhead coverage for those tanks on the air support, they're sitting ducks for the aircraft coming out of Russia. So the United States at current is running the risk of humiliation yet again, which unfortunately we're becoming used to, especially after Afghanistan. So, and I get no joy out of seeing my country, which I love. I love my country, America. God, I'm a bleed blue, red, white, and blue American. This is a loser. This is a loser. This war didn't have to happen. This is a loser for the United States. It's a loser for NATO. They're used to losing anyway. But they're going to try one last bit of desperation. We have to hope that we don't end up in World War III. And at some point in time, the market is going to get spooked by an event. And God forbid, I think somebody just put this in here, Corey, just put in, I think we've seen the tactical nuke used by Russia before it's over. If we see that, then it's, I don't know where we go from there, but it can't be good. And God help us all. God help us all. So, these are the things that are happening. I don't believe in coincidences. I haven't believed in coincidences for a very, very long time. All of these explosions and derailments at the food processing plants, I'm not buying it whatsoever. We are at war. So now let's talk about where we are technically on, I can't believe it's 7 o'clock already, but we're going to go anyway. Let's talk about where we're at technically on the triple Qs. And technically, monthly chart of the Qs, we are seeing a rejection at the 310 mark. And it's at that rejection point where we began shorting the Qs. The bet is that it won't close above that 310 mark. So right now we look okay. You know, I'm not saying we're going to be right by the end of the month. For all I know, we're going to close at 315 on the Qs and I'll get stopped out. It's okay. You just need to know what's your pain point. When are you going to get out? Weekly chart. Now, this is not a bullish chart. It's not a bearish chart. I can make the argument, as I did with members over the weekend, that this is a bullish chart. Maybe this is a bull flag setup. It's a continuation breakout pattern. I'll wake up tomorrow morning. I'll have egg all over my face because I'm short. All right. I'm ready for it. But I know that this is a threat, and I had better not get all cocky because I'm buying into my own argument about the yields are moving up higher and the yield curve is going to invert. Well, the yield curve is not, excuse me, the yield curve is going to steepen, and that's going to cause equities to buckle. It's not steepening yet. So we can't go getting aggressively short the market. So if we stop out small. So we're at a precipice here in the market. Either we are breaking out or we are breaking down very, very soon. Now, when you take a look at the monthly chart of the 10-year yield, folks, this is not what you want to see if you're a bull. Overlaid here, correlation of the 10-year yield versus the triple Qs. They are about 100% inversely correlated. They do not like rising yields when they're up this high. Down here, didn't really make that much of a difference. Up here, it makes a big difference when you're flirting with a 4 handle and you have tightening yields on high beta stocks. And what's happening here on a weekly time frame is that we are breaking out. We have new weekly higher highs. And last week, we did see a little bit of resistance and a rejection. There was no breakout last week, but we will be watching for it this coming week. And believe me, traders will be watching it as well. And for those folks that are looking at this and saying, Trice, again with the bond yields, your competition in Wall Street, they're looking at this. They're looking at this and they're planning accordingly. Don't let these people on CNBC take parking space up in your head. They won't be talking about it negatively. They'll be talking about this positively. Wow, look at the yields. They're moving up higher. Equities are still remaining strong. It's showing economic growth. It's showing that the economy can handle rising yields. The yields haven't hit the market yet. They haven't hit the economy yet. It takes 6 months minimum for a rate hike to hit the economy. We still have the rate hikes of 2022 yet to hit fully the economy in 2023. They haven't hit yet, and they're waiting for a pivot. I'm waiting for a tsunami of selling. Here's another view of the weekly chart, 10-year yield breakout 2 weeks ago, and this week we're flirting with new higher highs. The yield curve remains inverted, but we are consolidating, and this, I would argue, this descending wedge formation is unsustainable, and overlaid here is the S&P 500. And take note that as we neared the upper band of resistance, we stalled out. We are not putting in new higher highs. We are stalling at resistance while the stochastics, the momentum index for, or the indicator for, the yield curve is beginning to move up. What does that mean? Let's put it into context. Equities can rally while you have an inverted yield curve. We go over this all the time, simply because people like to use the word inverted yield curve or the phrase inverted yield curve because it makes them sound intelligent. All right. Don't let them take parking space up in your head. It doesn't mean sell equities. It means get ready, but get ready for what? Get ready for the steepening, the normalization, the reaction of the Federal Reserve to whatever is hitting the economy. Once the Federal Reserve pivots, that's when equities go rolling over. Whenever you hear the word pivot and guys on CNBC or Fox Business News saying, hey, as soon as the Fed pivots, stocks are going to go moving up higher. No, they rally in anticipation of pivot. They sell off on the pivot. Go back at any period of time. When the Fed pivots, equities roll over initially. And then they hit equilibrium. They hit equilibrium where equities can rally with enough liquidity, and then stocks move up higher. Rinse, wash, repeat. So worry about the steepening of the yield curve, not the inversion of the yield curve, and what this breakout on monthly Stokes, not daily, not weekly, not 4-hour, monthly Stokes means is that we're beginning to see positive momentum. And that's the last thing you want to see if you're dollar cost averaging and you're 40, 50 years old. If you're 20, don't worry about it. If you're 30, don't worry about it. Stay the course. But beware, you're dollar cost averaging into this market. You're going into your later years. Be careful. Let's do some chart requests, and we'll call it a night. I'm losing my voice. You only see 5 likes? Guys, if you could please do me a favor, please hit the like button. I would really, really appreciate it. Oh, now you see 20 likes. Thank you, everyone. I appreciate it very, very much. Thank you very much. What kind of volume would be good signal to watch for? Well, as a precursor to a sell-off, what you want to watch out for, let's go to the SPY, because I think it was Joel that asked earlier about the SPY. And we'll go over that chart. We'll talk a little bit about volume. You know, volume's a great indicator of passion or the lack thereof. You know, so as we close out the month, how is volume? You know, this is a fairly strong bear market rally. We rally from peak to trough nearly 21% since the lows of October. Hell of a rally. So you would expect, or you would hope for, as we had broken out last month above this resistance level at the 400 mark, you would hope that the volume would be at least equal to, if not higher than, the prior month. Now, we have a few trading days left to go. So we need to prorate that a little bit, because it's not fair to say, okay, here's the monthly volume for February, which is a shorter month naturally. It's only, what, 28 days? You know, at best, maybe we'll come in on par with last month. That's not a lot of excitement to me, to the long side. To me, this is a lack of institutional interest. And when you take a look at stocks that have really run, you've had the S&P 500 up 1.19% on the month. So basically flat. Whereas the small caps, the more junkier stocks, they're up over 0.75 of a percentage point. So you're seeing money rotate into stocks. Let's go to the ARK fund. They're going into stocks that don't have the fundamentals that the Qs do. So you have the ARK funds that are up 4.83%, where you have the Qs that are only up 2.22%. So you take a look at your volume here on the Qs, not wonderful. Not wonderful at all. And if you want to drill down further and you'd say, okay, let's take a look at a weekly view, because now the weekly view from last week is closed. You can compare apples to apples, week prior to last. How is volume? Volume was on par to the upside, as was volume to the downside the prior week. So it's neutral, neither bullish nor bearish. And I would argue that actually it's even more bearish than what meets the eye. The question is why? Why is this more bearish? The reason is that, don't forget, last week we were as high as 309.27 on the Qs. And Joel, if you're still watching, 400's the mark to watch on the S&P 500. That's monthly breakout, to answer your question. So the reason why this is more bearish, even though that we close up on the week, is that we close off the highs of the week, and we only closed up less than a half percentage point on mediocre volume. And if you want to drill down even further to get more granular, look at the volume to the downside for the past 2 days relative to the volume to the upside over the prior 2 days. And looking at these stochastics, these momentum indicators, they ain't looking good. They are not looking good. So I would argue that in the very short term, the technicals are not setting up well for the market. That being said, you cannot get aggressively short of this market because we're still holding monthly breakout points. So you can't forget about the macro view, the 100,000 foot view of the battlefield. That's the monthly view. Then the weekly view, which is still not broken. Daily view is beginning to show cracks. S&P 500, Dow Jones, NASDAQ. Let's do some chart requests. TRKA. KA, Bob. KA again, Bob. All right. So, loving the, this is a 15-minute chart. 15-minute chart looks good. Really good. Broke out. Let's go to a weekly view first. Get the log off. Folks, we're using TrendSpider, 35% discount code, automated trend lines. Please help support the channel, TrendSpider. Your competition is using this. I'm telling you, I sell a lot of subscriptions for these guys, and they don't cancel. So here's your breakout, and I could do manual trend lines, or I can use the automated trend lines from which we broke out of several weeks ago. We're putting in higher highs now, and we're consolidating. I love the RSI. It's moving up higher, higher lows, higher highs, daily view. We're in a tightening wedge formation. How do I know that these are support and resistance levels? Click of a button, folks. Click of a button. I've never gone over this chart before in my life. I did not draw these trend lines, with the exception of this one I just drew. And we're getting ready to break out here. I mean, the 15-minute chart, as I mentioned earlier, I would set an alert here. This is looking really good. I may buy this one myself. 15-minute view. Looking really good. Began to break out. Now, what would be sexy here is if on Tuesday we pull back and do a retest of support. I still wouldn't get aggressive. I would nibble. I'd scratch the itch and then buy more on a breakout above weekly resistance. I would stay very, very small on a retest of a 15-minute chart. Remember, it's very volatile. be more aggressive, or I would be more aggressive on a breakout above that daily resistance level we just drew, or the algorithm picked up. 15-minute retest. Touch, bounce. Scratch the edge. I don't need 16 days. All right, we're set to go there. That is TRKA. Very good looking chart. LMT for the lovely Jody. Annalie for Tim. BA for Dane. Hey, Bob. I got to bring it up on the big screen. Hey, Bob, do you think BA still has room? Yeah, that's one of our 30-minute stock chart. Oh, folks, if you're not a member of the 30-minute stock chart club, link below. We didn't have a meeting this past weekend. I'm going to probably do one. What's today? Monday? Maybe tomorrow night. So link below. We go over around 31 charts, 30-minute setups. Boeing is one of them. Join tomorrow night, and we'll get together, and we'll have a good time. So Boeing, we'll go over Boeing. BA, I'm going to leave it off with shop. I'm starting to lose my voice. So the window is closed on new requests. Oh, all right. I got a couple of last ones in here. GWW. And what else we got here? So I saw another one. Verizon for Tim. All right, folks, I'm going to close the window on new requests. Okay. You can hear my voice going. That's what happens when I rant. Okay. RKLB. Rocket Labs weekly view. Nice looking chart here. You have an inverted head and shoulders setup forming here. Actually, no, I wouldn't call it that. I call it a W formation. Basically, what we're doing is that we are consolidating, and we are getting ready for a breakout. Where are we at? 491. You got a nice little wedge formation happening here. Bull flag setup, whatever you want to call it cupcakes. It doesn't matter. Very bullish setup here. Weekly time frame. Rocket Lab going up higher. Daily view. All right. So, you can see where I drew my trend line. The algorithm is right in the same neighborhood as where I am. This is going to be your artificial intelligence for trading, folks. Throw it back on. There you have it. There are your resistance levels. So I think this is a buy. I would buy this here. Not a lot. Not a lot. I would buy it here, scratch the itch, much like with Troika, and then buy the breakout. I'm going to use the most extreme breakout point, which is the AI generated one. RKLB. Daily breakout. Long. Pop. We're good to go. RKLB going up higher. NTLA. Weekly view first. Struggling. It's in a downtrend channel, but not horrible here. I think it's recovering. RSI putting in higher lows. I'd be a buyer of the shares on a breakout above $44 per share on a weekly time frame. Daily time frame, you're struggling with a resistance level at 40, let's call it $41. You could scratch the itch on a close above $41, add more to the position on a close above 44.31 per share. Then you get a rally up to $50 and rising up to this upper band of resistance in red. Bullish on NTLA. For a guy that's been bearish all night long, I'm bullish on every single stock so far. LMY or LMTs. I think this is Jody's one. I probably wrote it down wrong. LMT, yeah, I wrote it down wrong. Lockheed Martin, we did an earnings trade here a while back. It's going up. Biden over in the Ukraine, spending our money. There's a rejection here at 477 per share. Actually, let's bring it up. It's really a rejection up here. I'm going to round this up to 492 per share. 492 per share. I wouldn't be a buyer until we clear that. You have a lot of overhead supply here. And the fact that it wasn't able to pull back and hold this support level or rally through and hold the support level or now resistance at 478.78, that's a problem. You want to scratch the itch on a close above 479 per share. Okay, I would stay small. Wait for this resistance level to get overcome and then become more aggressive. Daily view. Not loving it. Not loving it. Relative weakness lately. I would wait and see whether or not it's got the power to close back above resistance here. So I would avoid it. It isn't an uptrend channel. If you're going to use a stop loss right below Friday's lows or Thursday's lows, okay. But I would just stay really, really small. Annalie, big divvy player, REIT. Don't like it. Broke down. It wasn't an uptrend. It failed the week of the 6th. Last week, it attempted to recapture support. Now resistance. I would avoid. Daily chart, the algorithm's picking off. Support below. You know, I'm not a buyer simply because the AI is picking off support here. It may hold, it may rally, but what I would rather do is this. I'd rather play connect the dots, draw some resistance levels and say, okay, do they overcome? So if you want to scratch here, buy more and a close above 22, buy more and a close above 22.50. That's the way to play this, average up, because I don't like the way it's pulling back and putting in lower highs and lower lows. So if we break the support level, you really got to exit, keep that loss very, very small. Boeing. In this sector, I think GE is a better play. Let's take my drawings off. You can see how many times we go over this. We had broken out of this downtrend. This is the AI picking it off. Broke out, retest, follow through. Now, the market did you a favor last week. And you may be saying, how's that? The stock closed down. Good. Because what they did, let's get rid of all these old drawings I did. Okay, start fresh. Here. So what the market did is they caused the sellers to come out of their foxholes and disclose where they're at. So we rallied up to around 219.50. The sellers moved in, a lot of them, because they overwhelmed buyers. Bearish key reversal bar on the week closing this back down below what should have been a breakout. So I wouldn't be a buyer here until we see a close above 215.50 per share. Stay small, get more aggressive to the long side on a close above 219.60 per share, because then you would have overcome these sellers up there. Yep, that's what I would do. Then expect a rally up to 241 per share. Daily view, yeah, same strategy. A lot of resistance above. Shop. Now, they reported last week, I think. And apparently the street did not like it. So we have a failed breakout, meaning we broke out here, pulled back, did a retest. And this is why I always say, don't buy into earnings. Whenever you see somebody, you know who's notorious for this? I like him because he's entertaining. Guy Adami. He talks about buying stocks into earnings all the time, and I cringe. I cringe. So this is the gift that you would have gotten had you bought Shopify into earnings. Not that guy recommended it. I'm not saying that he did. But bearish reversal bar. This is going to go lower. Next support level down at 41.69 per share. I would avoid this unless you're going to short it. Just beware if you're going to short it. It closed and held the VWAP. That's the volume weighted moving average connecting the lower lows, prior lows. GWW. This is a good looking chart a couple of weeks ago. I don't think I added this to our best stock charts list, but I thought about it. And we're at the upper band of a rising uptrend channel. This can break out. It's been consolidating nicely, but I wouldn't be a buyer until we close above resistance, because while it looks bullish, it could be a stalling pattern as well. So just wait for the breakout. I mean, you're right there. I'm not a big believer in anticipating moves. That was the younger Bob. Older Bob Contrarian is, I hate when people talk about themselves in the third party. I just made myself cringe on the inside. I'm sorry, folks, that you had to watch that. Older me, I don't like anticipating moves. I rather wait for the event. I might speculate a little bit. That's why I say scratch the itch. Oh, long. That's the play. That's the shot. Daily view. A bit of a breakdown below support, but this is still a consolidation. I would wait for that breakout. You do have a lot of overhead supply. You have 1, 2, 3, 4 resistance levels immediately above on a daily time frame. Last one up, VZ, Verizon. Okay, let's get rid of all the old drawings. This is my old one. It bounced, broke out. If you bought here, nice little rally up. Let's get rid of all these. Okay, let's start anew. Start anew, nice and fresh. Higher lows. It's always the same with me. You have a beautiful, beautiful wedge formation forming here. You know, honestly, I don't know what this is yielding. Usually it's a pretty good yielder. But it's a staple. Nearly 6.5% yielder. with a setup that could cause the stock to go up measurably higher. So if you have a sell-off in equities, not that Verizon won't sell off a certain amount, it's going to do less worse because it's a stodgy old name. People own it for the yield, and that's all they want. So it's going to go down less worse. Any opportunity to buy it on that sell-off, you take advantage of it. But so this is I would buy this right now. I'd be okay with it, not aggressively. But once we begin to break out and above, I'm going to set up an alert here, in fact. And this could be a long-term options trade as well. I bet you the options are really, really cheap, but you won't get paid the dividend. That's the problem. The options seller still keeps the premium, or not the premium. Excuse me. He keeps the premium and the dividend. That's the beauty of selling premium. So this is one that I could buy, sell covered calls against, and collect a divvy. And that's it, folks. Verizon looking good on a breakout. Folks, thanks for being here. If you haven't already done so, smash the like and subscribe button. Don't forget the 30-minute chart club meeting tomorrow night. Link down below. It's a private session. We keep it private because we want serious traders. It doesn't matter if you're experienced or inexperienced. Just be serious. We have laughs, good time. And if you have any suggestions for how you want to make the format better, either this live stream or the 30-minute chart club, let me know. Everything's a work in progress. We have not figured it out yet. We change with what the crowd wants. I work for you. Till next time, have a profitable trading week and stay healthy. Be well.